Hyperspeed DeFi, never on a decline. Building the future, I feel like a savage.
Hello and welcome. I am Piers Ridyard, CEO of RDX Works, a core developer of the decentralized finance protocol Radix, a public ledger entirely focused on bringing DeFi into the mainstream. This is our podcast, The DeFi Download, a show about decentralized finance and all things crypto, where we dive into the details of the projects, assets, and services that are powering the DeFi revolution. Today, I'm joined by Yevgeny Quackberg, founder and managing partner of Re7 Capital. Re7 Capital is a company focusing on being responsible DeGens in crypto, applying traditional and boring investment management strategies and practices to the radical new world of decentralized finance. Re7 runs investment strategies in the 9-figure range and works with some of the top foundations in the crypto space and their crypto ecosystems. Yevgeny, thank you so much for coming on the show.
Pleasure to be here, and thanks for having me, Piers.
Very welcome. So let's start off with the basics. What's your background and how did you get into crypto?
Sure. Yeah, I like a lot of people here. I started in TradFi. Spent a couple of years working in a hedge fund, doing some equity long short strategies. Then spent way too many years in banking at UBS and Deutsche Bank, constructing portfolios and doing kind of cross-asset investment strategies for institutional investors. As I was doing that, I started educating myself about technology, came across, fintech, came across blockchain, eventually discovered Ethereum, and that was the beginning of my crypto journey. A couple of years after that, I joined a blockchain startup called Everledger. We were doing supply chain traceability of physical goods, which was way ahead of its time, but was a fascinating experience.
Yeah.
And eventually I saw DeFi, and that was it for me. Once I saw it, once you see it, you can't unsee it.
Sure.
And I just figured out that that's something I'll probably be doing for the rest of my career and create my own firm
So what made the first jump? Like, what made you go, cool? Like, not necessarily completely obvious to go from doing structured products and things like that at UBS and investment banking to going to a supply chain blockchain company. So what made you take the first leap into blockchain?
It took me a few years to get there, but it was clear to me that blockchain is this very unusual, funky thing where even though it's a software innovation, it has very clear economic and financial implications, which is very powerful. And that's what I've been doing all of my professional and personal life, being in financial markets in some shape or form. So being close to kind of, a new internet, as it was called, back in the day. And this internet is it's all about finance and somehow, it's all going to be magical. You can't really resist that if you truly, take the red pill and believe in this.
Right.
So that made me believe that I should be, jumping into that space fully in some shape or form. And then back in the day, it was pretty tricky because I was very anxious, to get, associated with some, messy ICR, and I just wanted to avoid any of that drama. And hence I joined a company which was the leading company in that particular sector, where it was a pure software business, right? You build software, you sell software, and that's it. There was no token element involved. It was a very conservative stepping stone for me. But extremely educational.
Yeah, and it was a really I remember Everledger very well. You guys started with diamonds and diamond traceability, which is a great use case because you can obviously indelibly mark the diamond itself with information that means you can track it back to the blockchain. But I can imagine was actually really difficult to get adopted just because at that time, was Everledger was 2017 or 2018? 2015. Jesus, yeah. So 2015, trying to convince people of the power of blockchain when you're many steps removed. You're not finance. You're now talking to much more traditional companies. Really, really hard. And you guys did an amazing job of getting profile and getting coverage and all that kind of stuff, but just very, very early. And so you saw DeFi. What was your aha moment for DeFi? What was it that like? What was the thing you said? Now you see it, you can't unsee it. What was that moment for you?
Well, up until then, I was very close. I think in 2016, 15, 16, I was probably at every single Ethereum meetup that I could find. And it was fascinating, but it was still at a story phase, right? So kind of you're being sold a story, and it's like, this is going to be an amazing operating system, the global computer, and you can do a lot of things with it. And, you just need to wait on these things will happen. So, okay, that's great. But DeFi were the first actual real use cases where you can truly use this technology for actual financial purposes, not just, gamble on a coin, but I don't need to explain what you can do with DeFi. So it was clear that this was finally moving from vision into reality. And the value add of that and the value proposition of that was very clear. So it was a no-brainer that we're finally moving from we can have from 0 to 1, now we're moving from 1 to 100. And mentally it made things very de-risked in my mind. And also I was, playing with some on-chain activities personally, and you could see how real it is and how inefficient the market is. And basically that gave me a signal that this is the technology I've been interested in for almost 10 years. The use case is finally real, and the market is extremely inefficient, which, is the perfect paradise for anyone who comes from traditional markets.
Right, 100%. I think that the opportunity in crypto has been so ripe for a sort of like analytical, very fundamentals based approach to financial capital allocation. And there's, historically in the crypto space, there's been so much money in it. Like there's been just the almost, it can be very inefficient. Like you can essentially do a lot of things wrong and still make money. I think that's changing, but it's interesting. You say that Re7 Capital is focusing on being responsible DeGens. Let's start with what about what you do is DeGen, and then let's talk about how you then turn that into being responsible.
Yeah. Firstly, as a disclaimer, we run some regulated funds with some serious capital. So first analysis is obviously financial investment advice, or any sort of solicitation. And, it's, we have to wear two hats, right? Because in order for you to be successful in crypto, you need to keep adapting and keep evolving, because things that were working 5 years ago, 3 years ago, 2 years ago, they're not going to work anymore. And you need to keep learning, and you need to be on the bleeding edge of whatever is happening. So you need to have a very special type of mentality where you're truly passionate about going on these clunky explorers and, clicking buttons and nothing works. And then you have to construct the transaction yourself, so on and so forth. So you need to be willing to do that, to keep learning it, keep experimenting. But at the same time, if you just keep kind of gambling away on leverage, like many people have historically, then it's a casino, right? So the trick is to basically combine this open-mindedness and willingness to experiment and go into things that feel and look very weird. Like a lot of things we do, if I would try to, explain them to, my old bosses, in traditional finance, they wouldn't take me seriously, frankly. But when you have, in DeFi, we have whatever, $100 billion sitting doing very unusual things. So obviously it's a real sector. So you need to combine that non-TradFi open-mindedness, but also you need to acknowledge that this is not a video game. This is real capital that's at risk. And you need to have a very clear risk management methodology that will allow you to survive through the next bear market and succeed in the bull market. And, you need risk management, you need discipline, you need processes, you need people, technology, tooling, so on and so forth. So combining those tools and best practices and applying them to these very unusual assets and types of strategies, you can hopefully achieve some success.
Okay, and so let's talk about that a little bit more specifically. Like, if you're investigating a new DeFi product, how do you think about it? Like, what are the key things that you're looking for, and what are the key like indicators of like success or interest that make you go, aha, I think there's something here. I need to learn more. And then how do you think about it once you've done that, how do you think about it from a risk point of view? What are the key things that are important to you and what's not so important to you, especially if there's any counterfactuals in there? Like, a lot of people think that these things are important. Actually, these things don't matter, but these things are really important to focus on.
Mm-hmm. Yeah, that's a very good question. So maybe taking a step back, it depends on the lens you apply when you look at protocols, right? So we do quite a few things within Re7. We run a strategy where we provide liquidity to DeFi protocols earning yield. So then we need to understand smart contract risks inside out, because we're parking capital. And then if we're right, we'll generate whatever, 20, 30% yield. If we're wrong, there's a hack and we lose all the money. So risk is at the heart of that. Then in a different strategy, we make investments into liquid tokens, kind of treating it as a liquid venture strategy. Not short-term trading, but actually saying this is a great app. This is going to be a great business. It's going to go from 1 to 100. Let's make an investment. We also run DeFi bolts. So we partner up with various DeFi protocols and we kind of add, features / mini apps on top of them, so to speak, offering specific services to their users. And then last but not least, we work with, as you mentioned, some of top foundations in the space, helping kind of them scale and grow their DeFi ecosystems. So all of that requires a very different lens when you look at these things. But, starting at the core, ultimately all of that is, these are all pieces of code, and we need to be able to understand those risks, right? So when we touch in any protocol, especially on the DeFi side, we would go and we would analyze, we basically do like our own audit internally. And then this audit is comparable to what you would have seen, in public audit space, but also we go kind of further where because the audit is a tricky thing, right? The audit doesn't explicitly tell you that it's safe, right? It just says, we haven't found any issues. But what does it mean, right? If they haven't found any issues, what does it mean? Does it mean that it's definitely safe? Or does it mean it's definitely unsafe and it's somewhere in the middle, right? So when you're an actual money allocator, you can't just say, okay, well, I checked it looks okay, because that really doesn't tell you anything. You need to go further and you need to look at relative degrees of risk. So what we've done is, we even published an article about this a couple of years ago. We've created our own system to do smart contract risk ratings. So if we're looking at two things and neither have red flags, it doesn't mean we will put, $1 here, $1 there, because maybe we'll say, well, according to our methodology, this is, AAA and this is triple B. So both are investable, but we'll put $1 here and, 10 cents into the second one. So creating that tooling and that mindset, and the process, it takes, many, many years. But that's kind of one aspect. The other aspect is, okay, let's say I'm okay, farming that protocol and deploying my liquidity and earning some yield. Now, if I want to analyze it as a business, frankly, that is very similar to the job I used to do 15 years ago in hedge fund analyzing stocks. You talk to the management team, you look at the data, you understand the product, you analyze the sector, you look at the numbers, you're like, okay, this is cheap. Obviously, you can't do the traditional financial methods here, right? You can't do a model, or you can, but it's going to be useless. So the way how you do your analysis is a little bit different, but the fundamentals are the same. Because if you look at any successful and kind of high value asset in the crypto space, ultimately there's a successful business behind it. And even if it's not successful in terms of profitability, it's big, right? There is, people often, for example, complain about something like a Uniswap, right? Where there are no dividends or there's no yield going to token holders. But actually it's a gigantic player in this category that is rightfully won every single time. And their token is trading at, multi-billion-dollar valuation, even though there is no dividend. So there is correlation between the fundamentals and the valuation of the asset. So therefore, you need to perform certain type of analysis. And the hardest thing, frankly, is to staying, calm, keeping your head when others are losing theirs, because crypto is obviously very volatile and narratives come and go. So you need to have a method, and you need to be able to stick to this method to perform consistently, right? Because the job for us, for example, is not to find the next a million X. The job is just to keep delivering all the time, across every cycle. And then last but not least, is, reputational nuances, because the space is messy, right? It's moving at a very, very fast pace. People are jumping from project to project. So reputation of these people is very important to us, and the quality of the management team. Because if, for example, we're building a vault on top of someone's protocol, we don't want to, get associated with people who we don't necessarily trust. So it's a very multi-dimensional lens, and that's why it requires a lot of tooling, a lot of data, a lot of analysis, and, quite a bit of effort.
And like, how do you like match all of that, or balance all of that with just staying on top of things and trying things out? Do you have like a small pot of capital where you'll just go and YOLO into a bunch of stuff just to try it out, see what it's like, and get a feel for it? Or does everything follow this sort of like very careful sort of procedural analysis?
It's a good question. There's this famous kind of saying that the test of the true intelligence is the ability to hold two opposite thoughts at the same time, right? So that's the real challenge, because doing it this way, where you have 99% of your portfolio doing the core, and then 1% that you use for the YOLO thing. You could do that, but the problem is that then the YOLO thing is not scaled enough in your portfolio. So if there is something that you think could be an amazing thing, but it's very risky, and you're only putting 1% in there, okay, well, even if you're right, so what, right? The impact on your portfolio is very incremental, right? So having a good idea is just the beginning of the journey, right? Sizing is also very important. So we don't tend to do that, because if you're just playing with some new protocol or some new primitive, you don't need to use money of a fund, because $10 is more than enough to just get a feel of how it works. And literally, like we'll go and put 10 USDC somewhere, or like 1 USDC. It doesn't matter. But the job is then to very quickly bridge the gap between that, $1 towards a meaningful allocation from the fund. And it's kind of leaning to that uncertainty. That's what makes for a successful, money manager, because that's basically the job.
So, going to your sort of like, we're not looking for a million X return, we're looking for consistent returns. That does obviously mean that you guys are not necessarily first or necessarily particularly early to things, but you are very, very, you're very analytical about taking an understanding of how DeFi works, an understanding of how yield farming works, and then making sure that you're applying a investment strategy model, but to a set of crypto primitives.
In short, yes, because especially when it comes to yield strategies, it's important to understand your risk return, right? So let's say tomorrow there is a new funky meme coin, and for some reason I believe that it's going to be very successful, and I want to buy it, right?
Yeah. Shout out to Hugging Early on Radix.
There you go. So you put $1 in, and then if you're wrong and you're rugged, you lose $1. But if you're right, that dollar turns into $1,000, right? So you're incentivized to take in crazy risks. If you're running a yield strategy, as I mentioned earlier, right? If you're right, you make 20% over a year, but if you're wrong, you lose 100%, in 1 second. So, which means you need to apply very different mental model, because if I'm, buying meme coins left, right, and center, then my job is not to avoid the bad one. My job is to get the good one. But if my job on the yield strategy is to make a little bit and make sure I don't lose a lot, that means my job is not to get the best one, it's to avoid the worst one, right? So it's a very different mental model and a very different approach that has to be taken. So ultimately, yes, you apply um, the same thinking and discipline from TradFi, but using different tools to do your analysis. But ultimately, it's the very similar logic. And even when we talk to to investors, we make like the metaphor that we use is if you give out a loan to someone, they either pay you back with interest or they default. It's kind of the same thing, right? And then when you apply that comparison, it becomes very clear how you need to run your risk.
Really interesting. And I know that you work with sort of crypto foundations, and you also work with crypto ecosystems. How do you think about crypto ecosystems, and what are the key things that drive crypto ecosystems?
Yeah.
And how do you think about being helpful within those ecosystems? What have you seen works as being sort of like good initiators of flywheels?
Sure. So, well, how long do you have? So the way how we think about it is, every ecosystem is like a city that you're building from scratch, right? So imagine you want to build a new city, Gotham on Mars, right? And you would like to get people to leave New York, Dubai, Singapore, and London to go there. So what is your pitch, right? You like, I have better schools, I have better healthcare, better environment to do business, no taxes, like whatever. So that's your ultimate hook. But if I can't get from New York to Mars, then I can't get there. And if I get there, but there are no roads and there is no plumbing and I can't live anywhere and there is no food, then your high value proposition to me is actually useless. So that's how we think about it, because every ecosystem is like an app store in a way, right? And you want people to use your store and not someone else's. There are many other metaphors that can be used, obviously. But the way how we think about it is, it's not enough for someone to come and say, hey, our chain is faster than everyone else's, and because of APC, we're the best. Fine, you need to have that. But in order for you to capture people with that, at first you need to do an insane amount of work in the background. You need to make sure your bridges work and there is liquidity between different types of bridged assets. You need to make sure there is basic liquidity on DEXs, on lending protocols, and then. And each component within that is a multi-dimensional set of works, right? Because when you're building a highway, right, you need to have a big team doing that. But you can't just build a highway without understanding where the sewage is going to go, and where you're going to build a hospital, and where the airport is going to be, and how do you manage the risk, and. So it becomes a very multi-dimensional set of works where, like, okay, well, we need the lending protocol. That means we need to have liquidity. Liquidity means DEXs. DEXs means bridges, and then. And then once you have the basic infrastructure and the basic plumbing in place, then you start building the high value add pieces. And then they're there, and then you need to get them integrated into the global economy, so to speak. And that's the next set of works. And that's why that work is fascinating, because no city is ever complete, right? Everything keeps evolving and keeps changing, partially because of the natural process within each city, but also as a response to what happens in the global economy. And just like imagine if you're a city manager for, I don't know, Rome, right? You would have had a job for thousands of years, because it keeps growing and keeps growing and it keeps evolving and it keeps changing. And that's kind of the way how we think about it, where all these ecosystems are very new, they're very fresh. And the thing that fascinates me personally is that, we're kind of inventing it all as we go along, because there was no one before us who's done it. So it's up to us collectively as a DeFi community, right, to create those rules, processes, and shape our own future. And, we've been, within my team, all of us individually, private to setting up the firm, we've been active in DeFi since basically day one. So there are very few people who've been doing this for as long as we have, and definitely no one who's been doing it for a longer period of time. So we've provided liquidity to hundreds, if not more, of protocols across dozens of ecosystems. We've seen it evolve from, I remember the early days of Ethereum, and look at where it is, today. So seeing that evolution gives you a lot of knowledge. right? And if you saw one city grow, you can help second and the third one grow as well, and help them figure out their unique USPs, right? And how they get customers on board. Because frankly, right now, there are more ecosystems than users, right? And users are very spoiled with attention, and they need to, and they have limited attention. So they need to make a choice, and it's very hard. So therefore you need to put in a lot of work to make sure they drink your, cola instead of someone else's.
And what have you seen as being the sort of like key things that grab the attention, as in, and what do you see, I suppose, what have you seen as the work behind that? Because a lot of projects and occasionally ecosystems feel like they sort of just suddenly burst on the scene and suddenly have a load of activity on them, but obviously none of that that's all by design. None of that is by accident. So what do you see as being the sort of key drivers of getting that sort of flywheel attention?
Mm-hmm. Well, it's as you said, there's nothing that takes longer than an overnight success, right? So, step one is you have to make sure the basics work, right? You have all the basic DeFi primitives. They're well funded with liquidity. They're all okay from a risk management standpoint, and it all comes together into an ecosystem, right? Once you have that, then you go one step further and you start experimenting and you start scaling. And you have to do two things at the same time. You need to keep getting users into your ecosystem whilst experimenting with new things, right? Because maybe you want to experiment with you want to be the destination where people go and do prediction markets, or meme coins, or gaming, or social, or whatever. And it's a difficult thing, because as you're looking for your, differentiator, it's like you're moving in parallel, right? So on one hand, you want to find a differentiator that just captures everyone's attention. And then you acknowledge that you can't just sit and wait for people to come to you. You need to keep moving. So you keep promoting your basic things, making sure people come to you, do some things they can do elsewhere. And you acknowledge that there is some differentiation, but frankly, it's marginal, whilst you on the lookout for the next thing that gets you from 0.5 to 1 effectively.
It reminds me a lot of like the car strategy. Like if you're a car brand, and a lot of car brands, even like very middle of the road ones, will still do a high performance car. Mm-hmm. And we'll spend it, and like they are in some cases for a lot of these sort of like middle of the road brands, they're complete loss leaders. Like no one wants to buy the high performance Peugeot, right? But Peugeot still does like a couple of these cars because they get attention in a way that none of the other stuff does, and people will come into the garage mm-hmm. to have a look at it. They won't buy it. They'll buy the 4-door sedan, but they'll come and have a look at it. And I often think of things like meme coins as being a little bit like that as well. Like if you actually look at the key things that create sticky users within things like Solana, it isn't so much the meme coins in terms of sticky capital. It's the sort of Sol Lens, which is now Ave, I think, and the Dexes and the things like that of the world. But it's that what's that thing? And I think the best example of that in the crypto space is still to this day Luna and Anchor, right? Like the flywheel effect that they created from that stablecoin and the 20% savings rate on the stablecoin was insane. And like it was starting to actually get traction in terms of people were coming and building other applications on the Luna chain, and it was creating its own flywheel effect to then create the other things that people wanted to use. But it was such a great example of a core DApp, and you can see that. Like I think Ethereum's one of the few places that wasn't so true, and that was just because they were the first place that you could build smart contracts. So there was this whole period of people just being like, what's a smart contract and what can we do with it? but almost every single app ledger since has had that, like, it's had the core narrative, and then it's had that core differentiating thing. And the ones that have been most successful have been the ones that have done that. So, like, in that vein, what do you think is the next narrative, or like, what are you looking at as, if you were giving your advice to DeFi builders today or Web3 builders today, you don't want to be looking at the last meta, you want to be looking at the next meta. So what do you think that is?
Yeah, well, that's an impossible question, obviously, right? Because who knows? But actually today it's very easy for me to give an answer to that, because the thing that completely kind of fascinated me and captured my attention over the last few weeks have been, the blossoming of AI agents. So my team and I, we've been doing research on them for a while. We've been following that as a space, but it feels like we're approaching that kind of inflection point. And I think that's very interesting, because that's different. It's the first time in a long time when things are different. I have no idea whether this AI agent, let's call it sector, will scale, succeed, and whatever. But the reason why I'm highlighting this one rather than, go and build another popular fund is that it's new and it's different. It unlocks different types of use cases. The experimentation surface is truly limitless by definition. And I think that can unlock a lot of very interesting stuff, including the use cases I can't even think of. And that's where the real power was of crypto lies, that by combining, tech, finance, and, economic incentives, you can create new types of things that could have never existed before, right? So I would be, if I was, coming into this industry today with like no prior, preconceptions or, established businesses, that's probably where I would focus my attention on, to see where this could lead, right? Without knowing where your journey takes you.
Interesting. Okay. So the overlapping of crypto and AI and how AI agents may work. I'm talking specifically like for crypto builders today. You think that's the key area they should be thinking about?
I'm not saying it's key, right? Because someone can go and build a very successful game, right? So this type of advice is very individual, right? You can give someone the right advice, but it's not a good fit for them. So, but as a general theme, I think that's a space worth looking into at the sector level.
Really interesting. Well, Evgeny, it's been such a pleasure having you on the show. Thank you so much for your time. And if people want to sort of get in touch with you or find out more about Re7 and the kind of services you offer, where's the best place to get started or reach out?
Yeah, well, we have a website, Re7.capital. We have Twitter. So yeah, people can read about the strategies we run, check out the vaults we have using, scrolling through our Twitter, and yeah, reach out anytime. We're always looking for new partners and friends.
Awesome. Evgeny, thank you so much.
Thank you, Piers. Pleasure being here.
Utility, do you better call on these guys? I'm going radical, I'm going Radix, I'm going radical, I'm going Radix. Hyperspeed DeFi, never on a decline, building the future, I feel like a savage.